Hey everyone, quick update for January 16th on Thursday. So the S&P down 25, NASDAQ down 210, Russell a little bit red, Dow down about 0.33%, about 150 points. I kind of thought going into today that today would be kind of a fairly tight range, or we might get a little bit of a pullback based on the fact that we've had two really big economic reports this week. You know, we had PPI first and then CPI. We've had a pretty significant move, SPX from 5770s up to 5970s, about a 200-point move. And so, you know, the market needs a little rest, and so that's what we did today. If we look at it on a 5-minute chart, you can see pretty tight range. Didn't even touch its expected move to the upside or the downside. Came within about, was that about 7 points of the lower expected move. But pretty tight range overall. Great day for selling premium. In fact, had a good day. Sold a couple tranches of price action iron condors, booked 1,800 and almost 1,800 on the second one. I did do a discretionary RIC that would have hit profit target had I been paying attention, but I didn't have it in, and then it bounced on me, so ended up taking a loss of 640 on that one. My British iron condors, also nice win, almost $1,400 on those. Mahomes was a winner, plus 1,000 on that one. But booked 225 on a 1-2 double calendar from yesterday. Entered a 1DTE trade that I ended up transforming into a risk-free vertical spread to the upside. So I've got a minimum of profit of 330, max profit of 1830 on that one for tomorrow. If we close above 6,005, I would hit max on that one. So it took a little bit of a bullish bias on that. And then my day trades continue to do well, another almost $1,000. Coinbase was my biggest winner, plus 1,300. Goldman, small winner. Robinhood, small loser. Netflix was $1,100 loser. PLTR, plus 521. Tesla and UNH, small winners. So another positive day for day trading. So overall, pretty good. Now, the one thing I wanted to mention, well, a couple of things. One, the market's kind of sold off into the end of the day. Here's a chart of a 5-minute chart of ES. And the cash close was right here. And we had another little flush after the bell. Now it's kind of stabilized here. But and a lot of the tech stocks also sold off. I mean, if you look at, like, here's kind of my main board. Apple was weak all day, down 4%. I mean, this thing just absolutely never had an uptick. It really looks like some kind of institutional selling here, just so gradual. You know, it's just a little bit too refined there. So it looks like some big boys are dumping Apple, but into the end of the day, I mean, look at these sell-offs in Microsoft, Tesla, Google, kind of across the board, and a lot of these tech stocks had a little bit of a flush. So we'll see if that continues on over to tomorrow. Tomorrow we have, we don't have any real economic news, I don't believe. Let me grab my calendar. Yeah, we had retail sales and unemployment this morning. So tomorrow, the only thing we have is building permits and housing starts, which most likely won't be too high of impact on the market. But I wouldn't doubt if we see a little continuation lower here. I mean, we've had such a big run, and that little sell-off at the end of the day is kind of making me wonder if we're going to come down, give a little retracement on this decent bounce that we've seen. So we'll see tomorrow. The one other thing I was going to share is that I'm going to plan on doing some more of that I had kind of put on the back burner just because I trade so many different strategies, and sometimes I have to table things just because I don't really have the capacity to do everything. But one thing I've been doing recently is a couple of these post-earnings bullish trades. And this is one that I did in Goldman Sachs. So, well, first of all, before earnings, I put on a little broken wing butterfly. I had a bullish bias, so I targeted the peak of this broken wing fly as the upside expected move before the earnings. and they announced earnings. The morning of the 15th. So I put this on the 14th, and price opened above the expected move. So I have no risk to the upside. In fact, if it expires here, I'll make $32. But the idea is if it moves the expected move in the direction, if you're right on direction, then you can get a pretty nice pop. On this trade, I'm just risking $468. If it were to end up in the peak here, I could book, twice that much, let's call it. So I like and then no risk if it blows beyond, which is what happened. Now, but what I wanted to share with you is, and we teach this in our earnings course, and that is I teach it as a short put vertical, post earnings short put vertical, where if price gaps up above the expected move after earnings, most of the time, obviously not always, there are no absolutes in the market. It's a tendency, it's a probability play. But most of the time, if it gaps above the expected move to the upside, and this only works on the upside, if it gaps above the expected move on the upside, it has a tendency to chop sideways and or continue to push higher. I had a bullish stance on Goldman Sachs because this was their previous all-time high. So I thought if we gap up above the expected move or beyond, it may continue to run and hit a new all-time high. That's exactly what happened. So what I did is, like I said, I did the butterfly, but then after the earnings were announced and it gapped up above that expected move, which I marked with this little green line on my chart, that was the expected move. That morning, yesterday morning, I put on this, what I call a vertical risk reversal. And so what, price was about right here when the market opened. That would have been 598 and change, call it. So about right here. So I put this on, and I had a downside buffer all the way down to about 580. So if price came down there, I would just bail and take whatever loss I had at that point. So that would have put price way down here as my exit point on the loss side. But on the upside, so I have this kind of a flat area where it's not a loss. I mean, it's only $168 profit, but I have a nice buffer to the downside. And then if it does what I think it's going to do, I have a nice profit up here. And so you can see it's starting to approach this max profit area. So if we get some more upside in Goldman tomorrow, I have an opportunity at booking max profit. I will scale out of it. I'm not going to hold it all because it is in kind of that range where I could move back and only make 168 or move up and make 1,668. And so I will scale out of this at some point tomorrow. Hopefully we get a little bit more bullish price action in Goldman. So anyway, just wanted to share that with you. The full details of that whole strategy is in our earnings course, but something that is fairly high probability, and we have earnings season upon us. This week was the banks. The fun starts next week where the tech companies start announcing their earnings. So I'll be doing some more of these as we get the opportunity. So hopefully that helps. Let me know if you all have any questions.